Hello traders, welcome to my YouTube channel. As always, kindly remember to subscribe, like and share. So today we're going to be discussing the ICT order block. So what is the ICT order block? So the ICT order block is categorized into two. We have the bearish order block and the bullish order block. So the bearish order block is essentially the last up close candle before a down move. So as highlighted in this diagram, we have the last up close candle which created the swing high that after that we saw the market drive lower. So in this instance, this bearish order block was confirmed when this bearish candle closed below it. So we see the market drive lower from there, and this is the bearish order block. So the bullish order block is the last down close candle before an up move. So in this example, you see the last up down close candle that the market created before the market drove higher, and you see it actually coming back to retest it. So actually that is essentially the order block. So how is the order block confirmed? So the order block is confirmed. Okay, when bearish, the bearish order block is confirmed once its entire range is closed below at a key turning point. So you have to have a key turning point beforehand. So in this instance, maybe for example, you have a weekly or a daily, let's say, imbalance or order block that has been hit. So once it is hit and the market is now at a key turning point, so we see the market hit that using maybe this bearish order block, and then we see the market start to drive lower, and then it takes out this candles range, this entire range. So you can see how aggressive it was taken out, hence confirming that this is now a bearish order block that you can now hunt for entry opportunities. So it will the market will typically come back to revisit this bearish order block area at a later point in time, depending on the higher time frame direction. So actually, depending on the higher time frame direction means that when the direction in the higher time frame is bearish, we want to see bearish order block being retested, and the market should show a willingness to drive lower from there. So you don't want any bearish order blocks to be taken out when the higher time frame direction is bearish. So that is essentially what we mean by depending on the higher time frame direction. So typically the ICT order block will be retested. So once the order block is created and formed, the market will typically retest it depending on the underlying market conditions. So the underlying market conditions is essentially the higher time frame direction still. So once the market is showing willingness to drop, so for example, when you're bearish, you'll want to see the order block being retested and driving the market lower. But not all order blocks will be retested. So I actually go deeper into which order block to focus on in my video. So actually the link is in the description, and also you can find it above the video. So check it out, guys, and you'll see why not all order blocks, or why you should not focus on every particular order block. So what are the key levels to consider when trading the order block? So the order block is the entire candle, but within the entire candle we have the opening price and we have the midpoint of the body of the candle. So actually the midpoint of the body of the candle is the most sensitive area to consider when you're trading the order block. So actually I like to focus on the middle point, but more so I focus first on the opening price first. If there's no sensitivity, then the last place you want to see the market react from is the midpoint of the body. So when the body is big enough, consider the body. But if you have, sometimes you have a smaller candle, so you can consider the entire range when defining the midpoint of the candle. So we'll look at some chart examples. So guys, in this example, we're going to be looking at the euro dollar 1 week chart. So recently we came off a monthly fair value gap. We hit the midpoint of that fair value gap, and the market showed willingness to start driving higher. So once the market was driving higher, it was starting to create an order flow and leaving bullish order blocks. So I'll be highlighting this example. So in this example, we see that the market hit that fair value gap. So that's why I was saying that the order block, you have to be focused on the narrative. Basically, you have to know the higher time frame idea first, and then that's how the order blocks become relevant. So once we hit this imbalance, we started driving higher. So the order block actually was confirmed once the market, look at this point here. So once the market broke above this high, this range was broken above, that is where the order block was confirmed. But ICT also teaches that when you have two down close candles right here, that is an order block in itself. So these two candles are considered order blocks. So once this high was broken, these were confirmed order blocks. So you want to be watching for the market to come back down and retest that order block. So that's your entry right there. So in this weekly chart, you see that your entry can be right there in the order block, and the market drives higher. So it will be targeting this buy side liquidity. So the order block, once it is confirmed, that's actually what we call the change in state of delivery. So the market confirms that it is now delivering buy side, whereas it was delivering sell side. So initially we have been delivering sell side, and you can see also that we have had some bearish order blocks like this candle here that were retested and driving the market lower. So actually the market kept using bearish order blocks like this point right here. So you have to be looking at the candle with the highest body. It's not just a matter of the last up close candle or down close candle in terms of defining an order block. So in this instance, this was the major swing right here. Apart from this swing, we had this major swing right here. So this swing was relevant in terms of, that's why we're using this as an order block. And I will say that that's it about an order block, because essentially you don't want to be overcomplicating this, guys. So this is just, that's it. So there's nothing more to it. So you see the market after hitting that order block, the next week, look at how aggressive it expanded away from that level. So this is how powerful the order block is. So I really like the order block because it gives you immediate feedback and immediate narrative of where the market might be driving to. So you can even look at another example right here. So as you can see, like I highlighted, you can see that you need to be focused on the opening price of the order block first, and then you consider the midpoint. So in this example, you can use the entire range body of this candle. You can use the entire range and find the midpoint. So let me just do that. So if you consider the midpoint of that range, it's right there. So we have the midpoint right there of this entire range, but the market drives lower to find that opening price. So maybe in this instance, the market was intending to use the body of the candle rather than the entire range. So actually, that's how powerful the order block is. Thank you so much, guys, for watching. I hope this video has been helpful. If you enjoyed this video, don't forget to like, subscribe, and comment. Also, let me know what kind of content you want to see or any suggestions you have. Thank you.